Hi, Joe Kehrig with the Kehrig Real Estate Team. And before we talk this week about the San Ramon Valley update and what the heck is going on with interest rates, I want to talk to you a little bit about the difference between a coming soon listing and a private exclusive listing. You know, we've heard a lot about it, and there's a company out there that is really pushing the private exclusive listing, and a lot of clients are going for it. And I don't think they understand the difference, because if they did, it's something that they wouldn't even consider. First off, let's talk about coming soon. Coming soon is, we do that all the time on the Kehrig team. We basically, if a home is getting ready, we're painting it, we're getting ready to put on the market, we'll put it as a coming soon, expose it out to the real estate agents, but it's not ready to show yet. But once it's ready, we will just put it on the market. A private exclusive is when a company decides to list the home and then basically hold it to themselves and not expose it out to the public. And you would ask yourself, the same thing I've asked myself. Matter of fact, 5 years ago, I was with this company. And this is one of the main reasons I left, because I sat down with over the phone, I spoke with basically the president of the company, and he asked why I was leaving. I said, because I cannot sit in front of a client, a friend, who's looking at me to do what's best for him and try to convince him not to put his home on multiple listing service, when I know if it was my own house, that's the first thing I would do. And that's the first thing I always do, is put it on the multiple listing service and expose it to everyone. So a private exclusive, basically, they kind of hold it. And they're even talking about, well, you can come into our office and look in a book and see our private exclusives. Well, I can see where that's good for that company, because their agents now have the best shot. Their agents, in a lot of cases, are the only ones that know about it. And so only they can represent the buyers, and hence they get to what we call double end the transaction, represent the buyer and the seller. They certainly have a much better chance than exposing it to everyone out there. But is that the best for the seller? Now, I will tell you, I've been doing this for 47 years, and they'll make arguments. Well, not every seller wants to expose it out there. And there are cases. There's a case where maybe a seller wants to pull it off the market and he decides, well, okay, we'll do the private exclusive. Or maybe it's a high worth person with an expensive house, or a celebrity. So there are some cases where it might not make sense to just throw it out there on the MLS. But that's probably, if even, 1 out of 100. The other 99, the best thing to do is expose it to as many people as possible. So the private exclusive just holds it for them, for their agents, and there's no way, as far as the exposure out there, it's getting even close to the exposure it should. The home will sell for the highest price possible based on the more exposure that it gets. So again, the private exclusive is not something that makes sense for most sellers. Here's the other big thing. Because this is the clear cooperation policy, which passed back 5 years or so ago, because this company, same company, started hoarding listings. So what the National Association of Realtors passed the law that says, hey, if you expose your home, you can expose it to your office, but if you expose the home to a for sale sign or put it on Facebook or Instagram, you have to now put it on the MLS as basically an exclusive listing that at least all the other agents can see it, to create a level playing field. So again, that's why the clear cooperation policy was passed. Here's the biggest thing you have to know if someone's talking about a private exclusive, is the fact that now Zillow and Redfin, two of the largest portals that are basically, that's where people are finding your home, they're so much against it that they have come out and sat there and said, if you start this as a private exclusive and then you come on the market, the normal market, we're not going to put it on Zillow or Redfin. And as of now, that is what they're saying. So even if you put it on private exclusive and then decide to put on the MLS, you're losing a huge amount of marketing. My opinion, and my opinion only, if someone's trying to talk you into a private exclusive, I want to just walk. I'd run away from that conversation, because in 99% of the cases or more, that is not in the best interest of the seller. but in the best interest of that company. So now let's get on to our weekly update for the San Ramon Valley and talk about what is going on with interest rates. You know, you see with this slide that it was stable in March, but you can see the volatility in April with the 30-year fixed interest rates. It went down, then it went way up. Now it's gone down a lot of it. It's all over the board. You know, if you look at the inflation numbers, because remember, here's what the Federal Reserve does. The Federal Reserve, remember, the Fed rate doesn't really have anything to do directly with the mortgage rates, but it is a ripple effect. You know, we're looking because that's the Fed rate is the money that the federal government will loan to the banks. And it directly affects credit card interest. It directly affects, you know, car loans and such forth. But mortgage rates are a little bit more of a ripple effect. But it does affect them. You know, sometimes the Fed rate will go down and mortgage rates will still go up. Maybe because when the lenders have something baked in and maybe the mortgage rates the Fed rate doesn't go down as much as they thought it was going to, rates might actually go up. But for the most case, when the Fed rate goes down, mortgage rates go down. One of the things that the Fed really looks at, this last week, they passed on lowering the rates, which was expected but disappointing to a lot of people. One of the reasons, you can see inflation has proven to be stubborn. Look at this slide. You know, their target rate is 2%, and it's been going down, but then it's going up a little bit. So the Federal Reserve, remember, the Federal Reserve will lower the interest rates to spur the economy. And if inflation goes out of control like it did a few years ago where everything started costing more money, they raise the interest rates to tamp the economy down. They lower the interest rate to basically spur the economy up. Now, that's what happened in 2020 after COVID. February of 2020 was the best real estate February in 13 years. So the real estate market was hot. Then COVID hit in March. And so what happened is everything stopped, and as you know, restaurants closed, the economy went into a huge recession. So what did they do? The Fed lowered the rates down to, lowered the discount rate almost down to zero, and then interest rates went down to 2.5%, 3%. Well, in an already hot real estate market, that was like pouring gasoline on a fire. So you had a situation where it then went crazy. Inflation went crazy, and then they basically had to tamp it down by raising the rates. We've been expecting the Federal Reserve to lower the rates, but as you can see, inflation is stubborn, and the unemployment, you can see with this slide, is staying pretty steady, across the board. But this is what they're looking at. So what's in store? Well, look at this. Most people now, when they look at an average of all the people who are supposed to know, said they expect 3 to 4 cuts this year. You can say 28% expect 3 cuts, 36%, almost 37% expect 4 cuts. So expect 3 or 4 more cuts, and probably one, next month when they meet. Because I'll tell you, it's tough for the Federal Reserve. They're walking that thin line of not having inflation. They're afraid of inflation going up, but at the same point, we're tipping on a recession. And so they're kind of caught in the middle as far as that goes. But so expect the rates to go down, but expect them to kind of go down, maybe instead of 6.5 to 7, probably 6 to 6.5. And that's probably the best that we're going to see. But if we do get into a recession, now look at this. It doesn't mean falling prices. 2008, obviously prices, because the real estate market led us into the recession. But besides that, in 4 out of the last 6 recessions, the market actually went up, and in 1991 it stayed about the same. So a recession doesn't mean falling prices, and this is why. Look at the last 6 recessions, because just what I said, the Federal Reserve will lower the rates as we get into recession to spur the economy. So in all last 6 recessions, interest rates went down. The last 30 years, anytime interest rates went down, prices go up. So if you're a buyer out there, and we talked about this in the past, if you're a buyer out there, expect that this is a great time to buy. There's lots of inventory. Yeah, rates are a little bit higher, but again, marry the house, date the rate, drop the ugly, rate when rates go down, and refinance. But you have a lot of stuff to choose from out there. Yes, there'll be homes on the market at the end of the summer, but again, that's a sales rack. That's the stuff that no one else wanted. because people will quit putting their homes on the market. Right now, we're at the peak as far as homes going on the market. So having said that, let's look at our actual update. Look at San Ramon. Now, San Ramon, you can see basically, the active properties are going up and up. Remember, during the 2021, there was actually more pendings than there were active properties. So you can see how far it's dropped. Usually if there's half as many pendings as listings, it still is a seller's market. So you can see right now the market's evening out. The last normal year, 2018-19, we expect to see probably the same, even though inventory has risen a lot, we're still not at where we were in 2018-19. So expect the fact that rates, that inventory will probably still go up a little bit. But again, look at the pendings. The pendings are still going. More homes that are on the market, the more pendings you're going to have. And like we talked about last week, you have a situation where, it's like a tale of two worlds. When I'm doing an analysis for someone, I look at the pendings and I look at the actives. The pendings are average selling in a week or two and selling for 100% of asking. They come out at the right price, they show nice. The things that aren't selling, they're staying on the market 2 months, and they have to do price drops to eventually sell. So you have what I talk to clients, you have reality here with the pendings, and you have fantasy land, with the listings. So we actually prepared too. We say, do you want to be here or do you want to be there? So people are still buying, and you can see even here pendings have gone up. Look at Danville. Actives actually went down a little bit. They've been peaking up and up. They actually went down, but look at the pendings going up. So people are still buying, but they're only purchasing the homes because there's enough on the market. They're only purchasing ones that are a good value, great location, show nice. And if you don't have those three things, then you're going to have a hard time selling. Alamo market, the same type of thing. Pendings are still up and actives are down. The Dublin market now, pendings stay about the same, actives went up a little bit. But here's the thing is, look at list price. Now, Alamo, 109%, they actually had 3 sales. But those 3 sales that they had, everyone went above asking a price and everyone sold within a week. So you have, I think the average days on the market for those 3 sales were 5 days. So they sold within days, and that's what's happening. And look at what it shows, 109%. All of these that are all going, look at the last 3 weeks, they're all 100% or more. And those have been on the market and sell within a week or two. Obviously, if a home's on the market a long time, it has to have a price reduction. So everyone's market is a little bit different, every home, every neighborhood. If you have any questions on your home, or if you want to talk about, if you meet with someone that talks about, a private exclusive and you want to know more information, give me a call and we'll sit down. And we're consultants. We'll consult with you so you make the best decision for you. That might be to list the home, not list the home, to buy a home, to not buy a home, but we won't know unless we sit down with you. Again, Joe Kehrig, give me a call, 925-487-6838, or drop me an email, joe@kehrigteam.com. Or if you want to learn more about the Kehrig team, visit our website, www.kehrigteam.com. Have a great weekend. This is a very fluid market. Make sure you tune in next week.